We're going to start off by asking you a question. Is the Fed looking at the right data? We just had an interest rate decision, and the Federal Reserve told us that inflation and the jobs market, well, they look pretty good, nothing to be concerned about. But for many of us, it doesn't feel so good. So we're going to take a look at a number of the big data sets, and we're going to look at what the Fed is watching and some of the numbers the Fed's not watching. We're going to ask you, who do you agree with, us or the Federal Reserve? This past week, the PCE, personal consumption expenditure, was reported. And taking a look at this very crucial piece of inflation data, we see here the PCE was released at a level of 2.6%. That's on a year over year basis. The Fed's favorite gauge to measure inflation is the core PCE. That excludes food and energy. The core PCE currently stands at 2.8% on a year over year basis. So inflation, according to the Fed and the PCE, looks like it's, kind of holding steady. We had GDP released this past week. The economy grew at a rate of 2.3%. And Federal Reserve, I think they expected, a number around this point. We see 2.3% is a little bit below last quarter's 3.1%. It's below the 3% quarter two prior to that as well. It's not an awful number, but it's not terrific either. And we're certainly not making upward progress. Then we take a look at the Federal Reserve statement from last week. Now, in particular, they said the unemployment rate has stabilized at a low level in recent months and labor market conditions remain solid. Let's ask you if you agree with that. Let's take a look at the unemployment rate. Well, it's at 4.1%, and they're right. It has stabilized. It doesn't look like it's going up anytime soon. But there's more to the jobs market than just the unemployment rates. Take a look at, for example, the JOLTS. That's the Job Labor Turnover Survey. This shows us in particular layoffs and discharges. It's reported in thousands. And we can see we're at 1.7 million right now. And that's, the second highest high we've seen in quite a few years, actually. So the number of layoffs and discharges is rising over time. That we don't see with the unemployment rate, by the way. Something else they said in the statement, in the Federal Reserve statement, they said inflation remains somewhat elevated. It seems not too concerning. Somewhat elevated sounds good. Well, here's a core PPI, the Producer Price Index. We spoke about this recently. On a year over year basis, it's at 3.5%. This is the highest high we've seen in quite a while. And it's concerning because this measures the cost of goods at the producer level, at the wholesale level. But it's thought that if producer prices go up, well, then this will certainly lead to an increase down the road in consumer prices. Now, what about growth? We just said the GDP is at 2.3%. That's not too bad. Well, there's other measures of growth. For example, the Empire State Manufacturing Index. Manufacturing is a big sector within our economy. Well, that was released at negative 13. That was the lowest low we saw since the beginning, or at least midpoint of 2024. That's 6, 7 month lows. That's not good at all. That we didn't see in that GDP 2.3% report. Well, what about the housing market? They didn't even talk about that. Well, here's a Case-Shiller Home Price Index. That's released at a level of 3.8% compared to this time last year. It's a year over year basis. And we can see this is the second lowest low we've seen also in quite a few years. That certainly is a lot more of a bleak picture than we've been led to believe. Also, there's other news outside the standard monthly numbers. Whirlpool stock was down 20% this past week based on earnings that were really disappointing. And in part, Whirlpool, they said that there's really a dry up of demand. There's not a lot of demand for their appliances, and they see concern for the housing market. So that's really not a good sign either. So we're going to ask you, vote on our poll. What should the Federal Reserve do? Did they get it right? Should they cut rates? Is the economy in trouble? Should they raise rates? Is inflation coming back? Or should they not change? Because we have to wait and see. Now, this is not an easy question to answer because some of the numbers that we've highlighted, such as the manufacturing data and Case-Shiller Home Price Index, shows us a very weak picture of the economy. But on the other side, we see the core PPI. That's at the highest high we've seen in quite a while. So we do see a risk of higher inflation and slower growth at the same time. So is the Federal Reserve wrong, or did they just understate the problem? Next week, We have a slew of economic numbers. These are some of the big ones: construction spending, factory orders, ADP employment, and the really big non farm payroll. We hope this has been helpful. We look forward to seeing you back.